What is credit creation? How does the capacity to give credit get created in the economy? We would have heard terms like credit expansion. What does it exactly mean? So let's understand how exactly credit gets created in the economy. The central bank of the country, Reserve Bank of India in India's case, for example, or Federal Reserve in the US, has a very central role to play in the economic management. And one of the important aspects of economic management is to make sure that there is adequate credit supply for businesses as well as for individuals. There are various credit products, for example, term loans, working capitals that are given by the banks, and even personal loans that are given to the individuals, or home loans, vehicle loans, etc. Now, how does the central bank of a country, for example, Reserve Bank of India, create credit in the economy? Let's look at the preamble of the RBI Act. The preamble of RBI in the RBI Act reads that the RBI is established to regulate the issue of banknotes and keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit system of the country to its advantage. To have a modern monetary policy framework to meet the challenge of an increasingly complex economy, to maintain price stability while keeping in mind the objective of growth. Fundamentally, the RBI creates credit in the system through banks, which it regulates. Now let's look at the credit creation formula, which explains to us how credit gets created in the economy and how much credit gets created once the central bank infuses the money in the economy through the banks. Credit creation is equal to initial deposit, we can call it D, and in bracket 1 minus R whole divided by R, in which case R is the reserve ratio. What is the reserve ratio? Reserve ratio is the money which the central bank takes back from the banking system as a reserve. In India, there are two types of reserve that RBI has prescribed for the banks. Number one, there is a statutory liquidity ratio or SLR, which is currently 18%. Number two, there is a cash reserve ratio or CRR, which is currently 4.5%. So in total, the RBI takes out 22.5% of the deposits raised by the banks. So only the rest, that is 77.5%, is available to the bank for lending onwards to various businesses. Now, how does RBI decide what should be the percentage of SLR and CRR? That depends on various factors. The SLR and CRR was very high earlier, couple of decades back. Slowly it has been reduced in India to make sure that banks have a larger role to play and have larger freedom to create credit in the economy. If the RBI increases the SLR and CRR, for example, they take it, let's say, from 22.5 to 30%, then that much of a fund will be available less with the bank for lending on to their borrowers, in which case the credit creation in the economy will get reduced. If the RBI reduces the reserve ratio, which is, let's say, bring it down from 22.5 to, let's say, 10%, then the banks will be able to lend more to their customers. However, this can put the banking system at risk because banks are lending out most of the money, and also it can create inflation in the economy because there is too much of a credit available. So RBI has to walk this tightrope all the time while making sure that all the objectives are being met. There is adequate money supply, credit is available in the economy, inflation is controlled, as well as interest rate is controlled. So these factors at times act against each other, but that is something that the RBI has to very astutely manage. By looking at this 22.5% SLR and CRR, we will not understand how much credit will get created in the Indian economy. So let's take an example where the ratio, the reserve ratio is, let's say, 10%, and how much credit can get created. We looked at the formula earlier, which is credit creation is equal to D in bracket 1 minus R upon R, that is initial deposit in bracket 1 minus R. In this case it is going to be 1 minus 10%. As I said, in this example we are going to take 10% deposit, and upon R, that is 10%. So let's say initial deposit is 10,000. 1 minus R will be 0.9, so 9,000 divided by R, which is 0.10, which will be 90,000. So we'll see that 90,000 rupees of credit gets created if initially 10,000 rupees is introduced in the monetary system by RBI and the reserve ratio is 10%. This table explains this by way of an example. You can actually put this in the Excel sheet and you can use the formulas to check out that if the reserve is 10% and initially 10,000 rupees is introduced in the financial system by the central bank, in that case ultimately after a lot of cycles of circulating of the money in the banking system, 90,000 rupees worth of advances or credit will get created in the system. Let's look at India's case. For example, when the SLR is 18% and CRR is 4.5%, total of 22.5%, theoretically how much credit can get created in the system if, let's say, for example, RBI introduces 10,000 rupees in the monetary system. As you can see from this table where the 22.5% reserve is assumed, initial deposit of 10,000 will mean that 2,250 rupees the banks will have to put it back in with the RBI through reserves, SLR and CRR, and they can give advances only to the extent of 7,750 rupees. Of course, this example is theoretical. Practically, the bank will not be able to immediately distribute 7,750 rupees. They have to find the borrowers, right? And the borrowers have to be good. It might take time. So there is always a lag in the system. But theoretically, 7,750 rupees can be given out by the banks by way of advances. Now, those 7,750 rupees will again come back as deposits either with the same bank or with some other bank in the banking system. Now, those banks again will have to put 1744 with RBI by way of deposits against SLR and CRR, and only 6,006 rupees they will be able to advance to their borrowers. Like this, the cycle will continue, and in the end, deposits to the tune of approximately 44,444 rupees will get created on the liability side of the balance sheets. The banks will put 10,000 rupees with RBI back as deposits in the form of SLR and CRR, and they will give out advances to the tune of 34,444 rupees. So with 22.5% reserves, we saw that approximately 3.4 times credit or advances are being created in the banking system. Of course, this is just a theoretical example to explain you the credit creation. The credit creation will not be exactly 3.4. It will be obviously less because there is a lag. Also, all money the banks will not be giving by way of advances. They will be also putting some money by way of investments other than for the treasury purposes. So, but this will explain you by and large how the reserve ratio impacts the credit creation in the economy and the role that the central banker has to make sure that the credit supply in the economy is adequate and it is also not too much, which can lead to some kind of an economic crisis. I hope with this you have understood the concept of credit creation as well as credit multiplier and found this video useful. If yes, please do share this video as well as subscribe to my channel. Thank you very much and cheers.